Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today we've got Steve, fresh off his grand final win. How you going, Steve?
Hey, Ali, I'm good yourself. Good
Going
afternoon,
well.
everyone. Yeah, and pretty ecstatic about the win over the weekend. But obviously the Green Machine being minor premierships, even better as well.
Unreal, mate. We'd love to hear it. Okay, so moving into the agenda for the video today. For any of our returning viewers, this will look pretty familiar, but for all of our new faces, this is how we usually do it. So starting off, we'll take a look at last week and put a spotlight on some of the major or key events from last week, have a look at the key themes and see how these drove prices. We'll then take a look at some of the major events for the week coming up, see how this fits into the major themes from the week prior, and give our take on where we are expecting the prices to go. We'll then move into the technical corner where we'll put a spotlight on a couple different markets using our technical indicators. And then lastly, we'll move into the Q&A section where Steve and I will answer some of your guys' most commonly asked questions from the week prior. Okay, so moving into last week, starting off on your guys' screen, you'll see your top traded products from last week. Got a new addition into the top 10. We've got the S&P 500 coming in there, which I'm personally not very surprised about, given that they did hit an all-time high last week. But how about you, Steve? Any surprises?
Definitely no surprises given obviously the Russell 2000, especially the rotation out of the Mag 7 to more of the small mid caps, with the expectations of the September rate decrease. So the cut, generally Wall Street really focuses on the big caps with a lot of the media coverage, and the small caps are really underlooked and undervalued. So definitely a rotation and no surprises in that.
Too easy, mate. Alrighty, so let's move into the big events for last week. Starting off on Monday, we did have a UK bank holiday, but I did want to put some more focus on the RBA monetary policy minutes, which did come out on Tuesday, especially in the context of the RBA and future rate moves. So I did see a quote from the head of economics at CBA who stated that the minutes shifted focus from inflation to the labour market, with the September rate cut now firmly off the cards. So while a September rate cut wasn't exactly forecast by any of the big four banks, there still was a likelihood of it happening, data dependent. So, but now CBA is seeing the likelihood of this as next to none. So it reaffirms the current expectations, looking for a rate cut in November. And as a result, we are seeing the Aussie strengthen across the board, again against all major currencies last week, off the expectation that the rates will be held for longer. In particular, looking at the Aussie USD, it has been range bound between 64 cents to 66 cents for quite some time now, since mid May. And it's currently sitting in the upper half of that range. So if we do see some continued Aussie strength going forward, we could see a push to test the psychologically significant 66 cents price point.
Yeah, that's definitely a very strong resistance, that 66 cents mark. So we see that it could open doors, especially with the Aussie. So touching on the Aussie, we actually did see also last week the Aussie CPI numbers. As you'd see that it's 2.8% compared to the expected of 2.3%. But that's not really a true indication. So that was really moved by electricity and travel prices. The third quarter payments, which were basically the government subsidies for the electricity rebates in New South Wales and ACT, actually came out later than expected. So those numbers are not really a true reflection, and therefore we didn't actually see much change movement in the Aussie, for example. We also saw a lot about the GDP, so there was no real surprises around the quarterly on quarterly. Like we've mentioned in previous videos, there has been a lot of front loading, and that hasn't really trickled out of the GDP numbers when it comes to US. So we should be able to see a better sort of indication with the next quarterly to see really how the tariffs are impacting the numbers. So yeah, we also saw the unemployment claims. The unemployment claims that were pretty steady, were pretty well, which ties into what the Fed Powell actually spoke to about the Jackson, Wyoming. So really looking at the unemployment and employment in general, considering that I guess the dual mandate of the inflation. So inflation's kind of going up while unemployment's going down. So trying to get that sort of balance. We also did see the ECB monetary policy meeting accounts. What were your thoughts on that?
I don't really think it showed too much. I think we've seen previous comments from a lot of the ECB members who've confirmed that the Eurozone has reached its 2% target for inflation, or at least is getting towards it. So there doesn't really seem like there any real rush to move the rate. Seems like they're going pretty steady in terms of the equity markets. We're seeing, the French market, the Italian, the Spanish, they've all been hitting multi-year highs over the previous months. Well, inflation seems to be in place. So I think everyone was largely expecting that rate cut. We didn't really see too many comments or anything alluding outside of that either. I did also see that was reaffirmed by a couple of comments from one of the ECB policymakers, Olli Rehn, who is the governor of the Finnish central bank, who did kind of reaffirm those comments about the 2% target. So they're keeping an eye on the economy and standing by, ready to react if needed. So, I mean, I guess I know, keep an eye on the minutes if it does come out with anything, but I don't think it did, to be honest. Nothing's really moved it.
So you sure that wasn't yourself that were making those comments?
It could be both, mate.
But yeah, also what we did see was the China Purchasing Managing Index. So we saw over on Sunday, basically the manufacturing and non-manufacturing being very close to expected. It didn't really have too much of a movement with the Aussie. The Aussie's been fairly range bound, like what you mentioned a little bit earlier. But also notable events that we actually saw last week was in regards to Trump and his attempts to actually fire Fed member Lisa Cook. So last Monday we did mention about the attempts that Trump's actually trying to fire based on having Lisa Cook having two mortgages on two primary residences, which basically is bringing the question into the independence of the US central bank. We saw a while back in July that Trump tried to actually fire Powell before his terms finished on May 2026. So Lisa Cook has actually sued the Trump administration, and basically they've actually gone to court on last Friday. I mean, the Supreme Court has signaled that the president probably can't fire the Fed officials over policy differences, but they can do for cause. Typically, this means like whether it's misconduct or negligence of their duty when on the job. But considering that it's actually, to do with a personal, I don't really see that there's too much unless it's actually a crime, which I don't believe it is. It looks like Trump's kind of turning the government into the apprentice, which he obviously became famous for, pretty much saying you're fired. So that's his attempt with changing the political landscape.
It's reverting to type, isn't it? Okay, so now let's looking at some of the other notable key events from last week. So we've got the Shanghai Cooperation Organization Summit. I'm sure we would have seen a lot of photos about that for Monday morning for anyone who's been keeping up to date with the markets. Had a meeting, or I guess a summit meeting between the Chinese president, Russian president, and Indian president as well. Obviously, a few big players in the market. So Donald Trump, keep your eyes on that. We've then also got the S&P 500 hitting an all-time high. That was last week following the GDP numbers coming out. Gold's hit an all-time high on the Friday, all-time high close price, that is, on the daily, weekly, and monthly. Potentially a positive sign, but we will look further into the gold movements in the technicals later on. And this is one I did actually want to talk about. Got Alibaba announcing their AI chip to rival NVIDIA. So I think this one was quite interesting. Obviously, there's been a lot of headlines gathering around the Trump administration trying to, I guess, limit or block AI chip sales into China. So what have they done? Alibaba's just come out and said, all right, fine, we'll do it ourselves. So that's pretty much the sidestep in the US and NVIDIA. As a result, we did see NVIDIA's stock price take a little bit of a dive. It was down 3.32% on Friday. And that was also fed through to the indices as well. The Nasdaq declining 1.3% on the day. The S&P 500 declined from its all-time highs the day before to lose 0.63% on the day. And the Dow as well was relatively unchanged. It didn't go into the negative, but it definitely wiped out a lot of its early gains for that session. And we've also got Bitcoin fell below its key resistance prices 112K, 110K. Steve, we've actually been talking about this one in the office as well. We highlighted those price points in previous videos, and we've seen it absolutely break those support prices. What do you reckon?
Yeah. I mean, especially when you mentioned, I mean, I think it was probably a few weeks back that you mentioned about the key support being that sort of 116, and if it was broken, we could be looking at 112 and 110. So pretty spot on that. I think it was 108 a little bit earlier today. So it's interesting to see whether it's going to have a bit of a bullish sort of bounce or whether it's actually going to test that 100 mark. That would be pretty extreme, but you never know what we'll see with that. We've also seen the Trumps of the tariffs. So basically, he's doubled down on the Indian imports over the Russian oil, so buying Russian oil, as well as the EU eyeing off tariffs on Russian goods. Just following the US's lead on the tariffs and trying to pretty much strong arm Russia when it comes to the existing sort of ceasefire. So it's interesting to see the EU take that approach. So we'll see with those sort of developments.
All good. Well, let's see how that one plays out. I guess, well, sticking on for the US as well, moving into this week, we've got, starting off the week, we've got a bank holiday in the States and Canada today, or yesterday for everyone watching the recording. But then also moving into, we've got the Aussie commodity prices, which should be pretty impactful for the Australian dollar and the Aussie market. Steve, what do you think about it?
Yeah, so we've got the bank holiday. We've mentioned quite a few times. Bank holidays means basically less liquidity. From Canadian perspective, it's really going to probably impact the loonie, if anything. But very important with the US public holidays. There's a tendency, what we see in the Asian markets, that gold, for example, goes up within the Asian sessions, so Tokyo or Sydney. And then within the US, sometimes, seeing what the US is like, they like to obviously buy the US dollar, which could impact gold. So it is interesting to see with that. While the next couple of weeks, we're actually going to have a lot of important data. So looking at this week, for example, we're looking at the US inflation. It's going to be really key to see how it ties in with Jerome Powell's, so Fed Chair's speech at the Jackson, Wyoming, as well as the unemployment. So basically the dual mandate being the inflation and the unemployment, where it's basically said that the inflation is increasing as well as unemployment, which is decreasing. So it's going to be really, the eyes is really going to be on especially the ADP non-farm payrolls. So we saw that sort of 71K revision around there last time, and that sort of forecast. So that's going to really bring a lot of volatility and impact basically the expected September interest rate cut on the 18th of September. And just to give you some historical trends, so for example, September's been historically one of the sort of worst performing market months when it comes to the market. So in 2008, the GFC on the 15th of September is when it first started with the GFC. In the 20th of September 2018, we saw the crypto crash. So a lot of people obviously benefited with crypto. We've also seen other crashes in October. So, hopefully history doesn't play its part again, but it is something to be wary of.
Thank you very much, Steve. Okay, so that wraps up the week ahead section. So let me just share my screen with everyone for the technical corner. So I think given that they have been dominating a lot of the big headlines lately, just in financial markets, or say lately, it's pretty much been been all year since Trump came in. But I want to take a look at the US dollar index. So I'm starting off with US dollars on the monthly chart. Highlighted by the blue line on your guys' screen, price point around the 100.4. I've highlighted this as a key support price, or at least it was a key support price until recent. So dating back from early April 2022, we saw a big significant break above the 100. The 100 price point being the psychologically significant. Traded up to about 112, came down, and it's tried to break back down below this 100.4 price point on a multiple of occasions over the last few years. So it's come down. I have seen a few breaks, but have failed to hold on a number of different occasions. Most recently, we saw it found support just here, rose up, but still made a lower high than its more recent swing high, and it made a significant break below. Now, once it did break below, we saw it did try to come back up, did try to go back into its prior range, although it failed to do so. The sellers took over, and it's since set back into this range, which I have highlighted. We've got a support sitting down at around the 96 and the resistance at the 100 price point, as I mentioned. So we did see once it traded into this range, it did make a new low on there as well. The month after that, we saw an engulfing candle. We saw it reversed all of the losses from the month prior, although it failed to break above its previous support. Now it's acting as resistance and since traded back into the range, which is telling me that there is still a lot of bearish momentum. And it looks for me at the moment like it is wanting to go lower. So to get a bit of a better understanding as well of like what's going on now, let's take a look into the weekly. So where I think this is quite significant. So firstly, we've got the moving averages. We've got the 50-day moving average is crossing over its other ones, which historically will be an indication of bearish momentum. As well, why I think this is quite significant, because if we look at the prior week, say of the last month, we're seeing a lot of tall wicks on these candles, which is telling me that the market is trying to push this price higher, or these traders are trying to push this price higher, but the market is reversing back. The sellers are overtaking the buyers, and they're trading well back in towards the range, quite consistent around the 97.5-ish sort of range. So see on that now, for the trading week so far, it is slightly down, but I'm looking for opportunities for it to go lower. Personally, I think it will, and I'm looking for signals to confirm my bearish momentum on that. If we look into the daily, let's get a bit of a better understanding too for where we're sitting. So for where the price point is now, it's actually at quite a significant price. It is sitting at its previous or its most recent support price, that is, sorry. So that's around the 97.5. We can see trending in the short term as well from pretty much over the course of August. We did see it is a decreasing swing high or a lowering swing high price, which is telling me that there is bearish momentum. But I'm looking for it to break this key support where it is now. I'm looking for a break below. I'm looking for it to hold and a continuation. So if we see a break, a hold, and a continuation go down, we could see it then move towards its more recent swing low around the 96.9, or then if we see a break further than that, we could see it hit down the bottom of the trading range, which we have highlighted on here. Okay, so moving
And if it does, if the
to our
USD does
second
actually,
technical video, we have got gold on your screen. So we speak about.
so if the USD does actually fall
Sorry, go ahead,
down,
Steve.
Ollie, I was going to say that Trump would be your best friend if you are correct.
I'm not sure I want that anyways. But anyway, take it over to the gold now. So as I was trying to say there, we have visited gold a few times in more recent history on here. But I thought it's worth revisiting, especially now that we are getting to a quite an appealing price point. There's a lot to unpack on this one, especially with the moves this morning and on Friday. So as you can see by the purple box on the screen here, this is the trading range, which we've identified as gold being trading between since looks like mid to late May, since about there. So we've got our resistance sitting at about 34.34, or support, sorry, resistance at 34.34, resistance around the 32.70-ish sort of price point. And it's been bouncing up and down for months now. It's sitting within this range, except on Friday we saw a pretty sizable push above. So now it's broken that key resistance price and it did close. And to start the trading week, it has actually moved higher. But for what I'm thinking on this one now is that I'm seeing it drifting a little bit far past its moving averages. It is looking a little bit overbought in my opinion. And I'm seeing that as well in the RSI as creeping into that overbought territory, which historically will lead to a slight pullback on the price, which is what I do think is going to happen. I think for where we're sitting now, if the prices can pull back, find a support at its previous resistance. I'm taking that as a very strong signal that the buying momentum is still in play. To get a bit of a better understanding as well of what we are seeing, especially in the short term, I want to switch to the 4 hourly, where the RSI is very much reaffirming what I was saying here before about it being slightly overbought. So for an overbought market, we will expect a bit of a pullback. So I would like to see prices pull back. If we do see it trade back into this range, we could see it move lower back to its moving averages. As I did say, it has overextended just a touch. But if it does pull back, finds support at its previous resistance and then continues, we could see it then move on to challenge all-time highs around the 3,500 price point. It'll definitely move up. If it comes in, finds support, it should move up. And then we'll see how that one goes on there. All right, so that brings us to the end of the technicals here as well. Sorry for fumbling the words a little bit towards the end. So let's move into the Q&A section. Steve, would you like to take it away with question one?
Yeah, so question one is a few traders I've been speaking to over the week is really just asked about how do you manage your emotions when a trade goes against you. So generally, a few of the traders are basically trading in the US session. So trading late at night. It's one of those things after a long day of work, and you see a trade going against you. It's really about having that sort of plan, so that sort of discipline. Obviously, having that sort of risk management, stop loss in place. But it's also about psychologically making sure that you're not always looking at the market. So I personally find that the more you look at the market, the more you kind of it changes your way of thinking. So sometimes it's better not to even overtrade, for example. So best things to do is always come in with a plan. So like with anything, once you've got a plan, you've got a structure, and you're able to actually cut off those sort of trades, even if they're going against you. It's just it's better to be safe than sorry.
All right. Thank you very much, Steve. And I'll take it away with question two on here. So, how are market expectations for an RBA rate cut determined? So, as many of our long-time viewers will know, Steve and I do talk about this a fair bit around the central banks, talking about the likelihood of rate moves from the central banks. So, to put a spotlight on the RBA in particular, the likelihood of a rate cut is determined by a number of factors. The main one being the RBA rate indicator, which they do actually supply to us themselves, which is calculated based on price changes in the futures market. As well, we've also got sentiment from economists and market analysts who give their interpretations based on the data. But I think where it comes into for you guys is, why is this significant? So we often do see markets pricing in rate moves prior to the announcement. So any changes in the probability of a rate cut will definitely be bringing in some volatility to the markets. Okay, so that brings us to the end of the video today. A recording of this will be uploaded on YouTube once we have finished. As well, Steve and I will be posting the links in our Telegram group and the VIP chat room. For anyone who hasn't got the chance to check out the VIP chat room or Telegram yet, I would highly recommend doing so. If you're looking for any help trying to get through to that one, please reach out to Steve or I directly. That's all from me now. Thank you very much, everyone, for watching. Steve, I'll catch you later.
Thank you, everyone. Enjoy your afternoon. Bye.